Hey guys, welcome to Tickzon Mentorship Scheme, where we try to turn our hindsight into your foresight. Now today we're going to be discussing some areas of which you should invest. So there's a lot of things going on around in the economy right now. Obviously we have the Korokoro situation happening, which is really devastating businesses, devastating the economy. On top of that, we still have Brexit to happen. We still have the stock market going down. We have the oil crisis. There's recessions in different countries, and it's looking likely that we may be going into a recession or a very tough period for a lot of people. But in every crisis there's opportunity, and so today we're going to be talking about some areas of opportunity for you. Obviously at this time, with everything happening and everything going on, people are losing jobs, people are being laid off, people are being forced to stay at home, especially if you're working a job that is paying you per the hour, especially if it's not salaried, no sick pay. If you're working for McDonald's, now you've kind of lost a salary, and so in this time right now, the main thing is for you to take care of yourself, take care of your family, because health is wealth, and without that, then you don't have anything else. And that leads us into the first thing that you should invest in, which is savings. Save your money, so that one day your money will save you. The Money Advice Service 2 years ago put out a statement saying that in the UK, up to 10.7 million adults don't save regularly, and 11.5 million have less than £100 in savings. Now I hope that has gone up, but if you haven't been saving, which it seems that a lot of people haven't been saving, this is a very good time. As any time, there's never a bad time to save, and the main return on investment that you get from saving is security. Like in a time like this, what you need is security for you, your family. So if you haven't started saving, then now is the time to start saving. Now we're going to talk about this in two aspects. The first aspect is purely just saving. Like if you've got an emergency fund, which is a 3 to 6 months savings of your monthly expenses, so it's not necessarily your gross income, it's your expenses, and if you don't have any savings, then this will be a really good time to start building your savings. Yes, I know we're in a crisis time, but still we don't know how long this is going to last, so you want to make sure that you're trying to save. And easy ways of doing that is by budgeting. I know that in a couple of days, if you're salaried, you probably still get your March paycheck, so it would be a good way to budget how that's allocated, or there's a couple of videos we did on that, so I think they might be popping up. The second aspect of saving is cutting on your expenses. Now, times like this where we don't, there's no reason for you to have your gym subscription on. We don't know when the gym's coming back. Stuff like Netflix and Amazon Prime calm, but this is a time for you to now go through your subscriptions, stuff that you're paying regularly that you may not need. So try to cut down your expenses. Obviously times like this, no restaurants, so that's low-key forced saving. So if you're someone that used to take Uber a lot, take restaurants a lot, times like this will help you save. So the first investment that you want to make, and this investment based on security, is saving, building up a proper savings pot. If you have an emergency fund, congratulations, you're ahead of the curve, and you're not part of the 10.7 million. But it's hard to not be part of the 10.7 million because it's tough out here, and try to cut down your expenses. Now I know a lot of people came here because of stocks. We're going to get into some stocks in a second. Before we get into that, seeing as it's a turbulent time, things are going up and down. One minute you have a job, next minute you don't have a job, and because of, similar to how we're speaking about savings, the next thing that is going to hinder a lot of people, get to people, is debt. Obviously, if you don't know, there's a lot of money that the government has put out there that they brought out in the last budget. The budget just announced to help you in case you either to stay afloat, in case you lost your job, or to handle your debts, or just have with upkeep. So if you are eligible, please apply for that. For every man, child, woman, I would suggest you go for that, especially to help you out. And in terms of actual debt, A lot of companies, I know that there's mortgage holidays. If you're eligible, you should be eligible to at least, I think, 3 months. For most credit cards, you'll still be getting the interest, whether it's 20%, 29%, 40%, but some of them have waived the late fees. So even if you're late on paying, you won't get that extra additional late fee. But mind you, credit cards have not waived their interest as far as I know. So you will still be paying 20, 29%, 40%, 35% of interest on any money that is left over after you've paid your minimum payment. So firstly, make sure you're still paying your minimum payments. Where possible, for debts like when you're cutting your expenses, cut those out. And in terms of like credit cards, obviously pay your minimum payment. Where possible, pay it all off, but only pay it all off in a time like this when you've got savings and you're secured. Because even though on this channel we're saying you don't really want to be carrying on credit card debt, but this is the power of leverage. If you can just pay off your minimum payment and make sure that your house is afloat, then do that. So get all that you can get all the free money that you can get. You know, this self-isolation thing, it be I be. Now, the third place we're going to talk about, investing, is an area of which has been impacted very heavily from this guru and people literally not traveling, and that would be the travel industry. Self-explanatory. So the travel industry is one industry to kind of really look at, because it's an industry that was expected to grow over the next few years. And as the stock market is plummeted like 30%, 20%, some companies are cheap, but there's two things for you to understand. One, more millionaires are made during recession, but two, not every company is going to make it out of a recession. So when you're going to pick a company within the travel industry, whether it's an airline, cruise liner, travel, transportation company, whatever it is within the travel industry, I'm not giving you specific companies because you cannot know, you just don't know. So you want to look at their assets to liability ratio. You want to see how many of them actually have money to get through this period. Like some companies are very good at saving, so they have like up to a year, 2 years worth of operating expenses, so they'll get out of this. So within the travel industry, you want to see companies that maybe you want to, it's not always black and white, but you want to see which ones are going to survive this, which ones are strong companies, which ones are probably going to come out of this alive. You can hear a lot of companies either closing down their stores, or some of them have already gone bust. Even though it's very cheap right now in the stock market, I mean, it could keep going down, it could keep going up. Obviously here we just do a long-term thing of consistently investing. So it's not about timing the market, it's about time in the market. Similar to travel, the fourth area we're going to be speaking about is the hospitality industry. So hotels, theme parks, even restaurants. So all of these things are basically impacted by people that are not going around. If you look at Las Vegas is basically shut down because no one's trying to travel. And so in this opportunity, you see companies within this industry who are likely to still survive. But like I said previously, not all companies will survive this. There's some companies that are basically living on a running cost and need things to actually happen day to day. So there will be some companies that will disappear due to this time and due to this thing. So due to this guru. But yeah, the hospitality industry is a very good one to check out in terms of hotels and stuff. But ultimately, like I said, do your research, because it might look cheap right now, but it might go down to zero. So we've spoken about savings, debt, the travel industry, and hospitality industry. Now the fifth one we're going to speak about, if you don't really want to waste your time looking at individual stocks or individual companies, looking at their balance sheets, cash flow, etc., then what you'd want to maybe look at is index funds, which we discussed in our previous video, which is basically a collection of X amount of companies, and then let's say instead of buying Tesla for £1,000, if you can use £50 and then buy a piece of 500 companies. So which would be like investing in either the FTSE 100, which is the top 100 companies in the UK stock market, or the S&P 500, which is the top 500 companies in the US stock market. Now, they normally give about between like a 5 to 10% annual return. So it's not like, oh my god, but it's probably still better than most of the savings accounts out there. But generally, if the UK or the US stock market goes up, these index funds will go up with it, because generally it's the top 10, top 100 companies, top 500 companies that are doing well, and that's normally reflected within the stock market. Oh yeah, before we go forward, two things. One, an investing disclaimer. Don't go and invest in a company today if you're not willing to hold it for the next 10 years. We don't know how far it's going to go down or go up, but historically it will always, with every downturn there's always an upturn. So it's up to you how you do it. So technically you never lose money until you sell. So the stock market is really a test of your risk tolerance. The second is a moral disclaimer. So even though that index funds are typically very, very good, and over like a 10-year period it normally beats even it normally averages out a better return than people who are day trading and everything like that. But it's for you to understand that if you own one share of S&P 500 or one share of FTSE 100, then you own a bit of every single company in there. So if in those 500 companies there may be, I don't know, an oil company, a pharmaceutical company, or one of those type of companies, and you have a moral objection to one of those companies, then owning the S&P 500 or owning the FTSE 100, you do technically own a little piece of one of those companies. So do with that information what you will, but ultimately, yeah. The next one is more of a one to watch rather than a company to our industry to look at. But within every recession or within every downturn, there's also companies that are actually steadily still growing. So it would be good for you. We still not 100% sure who is going to grow out of this period, because it's still at beginning times, uncertainty, lockdowns, etc. But there's always a couple of companies that will keep going strong within these times. So if you can find those, then even during recession times you can climb up. Similar to companies that will grow during this recession time, also look at the companies that are being considered to be bailed out by the government. So when the government brought out their stimulus package, something 500 billion pounds, etc., some of that money is going to go into certain companies to help keep them afloat, so that they can come out of this time more profitable. If you look at the banking crisis, banks stocks went all the way down, and then they got bailed out, and now all their stocks have gone up. Now, not all the companies will survive this period of time, but you know, how many people were thinking like, oh, I wish I bought Apple stock back in the day, I wish I bought Amazon back in the day. Strong companies like Amazon, Disney, all of these, Coca-Cola, all these kind of companies, oh my days, I'll give you individual stock, but I'm not a financial advisor. You want to go into it seeing companies that you're sure of or confident in that they can weather this storm, especially ones that have been through economic problems in the past. But this might be the straw that broke the camel's back, so do your due diligence. Now, the next one we're going to speak about is invest in a company or an industry that you understand. So if you do arts, I did arts and craft. I used to sell on Etsy, so I understood that kind of world. I used to do bead making, or still do bead making. So Etsy, I'll buy shares in Etsy because I understand this market. You know, and I did mechanical engineering, so I low-key understand cars. I low-key understand that industry. You know, so I would understand that, go in that industry. If you're someone, let's say example, you know, understand makeup, you know which ones are the good brands and all those kind of things, then invest in what you know. Ultimately, before you invest in anywhere, do some due diligence to try and understand what it is. Because me personally, I would never invest in anything I don't understand. That's the reason why I won't invest in like Forex or Bitcoin or anything like that, because I don't understand it. So if you understand what you're investing in, then you have security on that your investment is going to work out. Because when somebody sees something happening, then you already understand what's happening. Ultimately, still, You want to keep a general awareness of what is going on in the world, because everything, similar in the last video, everything affects the stock prices, but it doesn't necessarily affect the value of the company. For example, this Koro thing, for some companies it actually will affect the value of the company. So watch out when you're picking up your stocks or where to invest into. So guys, it's not about time in the market, it's about time in the market. So for me, I'm just investing consistently as it goes along, whether it goes up, whether it goes down, because I'm investing for the long term. So if you're trying to invest for the short term, index funds is probably not where you're going to go and get your highest return. It's probably going to be in day trading or in picking stocks, but go with caution, because it's basically like gambling. You don't know what's going to happen. Now the final one that we're going to speak about is, the most important investment that you can do is invest in yourself. This is, whether you're in self-isolation or whatever it is, invest in yourself in terms of your hobbies, invest in yourself in terms of your mind, invest in yourself in terms of understanding yourself, and ultimately invest in yourself in terms of making yourself more financially literate. Never have you been given more free time by force than now. So take this time to invest in yourself, because the more you learn is ultimately the more you earn. So if you use this time period to whether good platforms is like Skillshare, Masterclass, Udemy, where you can learn more skills, whether it's coding, whatever it is, learn a vast array of, YouTube is always the easiest place to learn. Google, the more you learn, read books, because after this period of time, we're not even in the worst of it. It could get worse, it could get better, no one knows. But if it gets worse, when you come out of it, we're going to be needing people who's going to be able to shine and show their skills. So whether it's at work, polish your skills for work, start doing online courses, invest in your mind, understand yourself more, increase your IQ, increase your EQ, and ultimately you'll be fine. So thank you for watching Tickzon Mentorship Scheme. Places to invest in. Ultimately, your money is at risk. Invest in what you know, but the stock market has really gone down. So as for me, I'm just going to consistently go in. Ultimately, the most important thing is making sure that you're safe, you're well, washing your hands, taking care of your family, taking care of your friends, and yeah, I wish you all well. My apologies to anyone who's lost anybody during this time. It's going to be a tough period. My condolences, but hopefully everyone stays strong and we'll get through this. So thank you for watching me today. Hopefully leave a subscribe, hopefully leave a like. It all helps us out here, and God bless you, and help somebody somewhere, shine a smile. Some people are kind of lonely right now, so if you can reach out, download House Party, get on FaceTime, call somebody. I don't care if they're your enemy, your friend. This is a time for us to come together, and ultimately together we'll all succeed. So if you've been watching here, thank you very much. Leave in the comment saying love is what we need. And yeah, take care, have a nice day, and thank you for rocking with us. Bye. I talk too much. Save, create your emergency fund, cut expenses. Debt, go get all that free money from the government, defer payments where possible. Ultimately, this is about securing your family, and where you can, continue paying off debt if you still have a normal cash flow coming in. Check out the travel industry, the hospitality industry. One I forgot to mention is just strong companies that will probably continue to grow. The big ones. Invest in the things that you know, and invest in yourself. Index funds, look out for the ones that are going to grow during this period, and the ones that may be bailed out, because those have the potential to grow. And do your research, please.